Hey traders! Today I want to go more in depth into a concept I introduced in my previous videos, which is using support and resistance levels as confirmation that the Fibonacci level you are looking at is a good place to enter the trade. I am going to take you through why these levels matter, how to draw them, and then how to integrate them properly with the Fibonacci indicator. Welcome to today's video. How to use Fibonacci retracement with support and resistance. Make sure you stay tuned till the end, as I have a bonus step which could make all the difference to your success. I'm posting 2 videos per week at the moment with great forex trading tips and content, so if you haven't already, make sure you hit that subscribe button to be notified of all my future videos. If you haven't already watched my previous Fibonacci videos, I strongly recommend you watch them first, as they introduce the concept of the Fibonacci indicator and how to draw it, which you will need to know to fully benefit from this video. Okay, so the first thing I do when analyzing a pair is to draw my support and resistance levels. Now, this is because I normally trade on a daily chart, but the critical levels are firstly drawn on a monthly chart. This means that logically, the first part of my technical analysis is always to draw on my support and resistance levels, and that's why I start drawing them on my monthly chart. I have 3 different types of levels that I will add to my chart. First up, we have the monthly support and resistance levels, which I edit to be red and the maximum level of thickness. Then there are the weekly levels, which I edit to be blue and medium thickness. And lastly, the daily support and resistance levels, which I edit to be black and minimum thickness. I do it like this for one specific reason: the differing impact that each of these levels have on price, and therefore I need to be able to differentiate them when I'm looking at my charts. The price of a market is more likely, for example, to bounce off a monthly level of support or resistance than a weekly or daily level, and more likely to bounce off a weekly level than a daily level. Also, if the price of a market has broken through a monthly level, for example, then it is more impactful than if it has broken through a weekly or a daily level. That is to say that it is more likely to continue in that direction for longer than if it had broken through a lower level. This already points me to areas on the chart where I could look to place a trade even before I go any further with my technical analysis. Of course, weekly levels are also important areas that can have a big impact on price or indicate which way price may head in the future. I add in these levels because I like to try and make 3 to 5 trades per week. If I waited for price to reach the monthly levels every single time before placing a trade, I wouldn't be able to trade that often, as they are normally pretty far apart, and therefore price can take a long time to reach them. Lastly, the daily levels give me even more opportunities to enter a trade in between those weekly and/or monthly areas of support and resistance. Okay, without further ado, let's take you through how to draw them. Let's use this example of the Euro-Pound chart. First, I start off selecting the monthly time frame. This means each candlestick represents a month's worth of price action. What I am looking to do is find levels at which price bounced off several times, as these are levels that are likely to be where price will do the same in the future. So, I zoom out all the way, and here we can see around the 9074 level, price has bounced off this area a total of 7 times. I therefore draw a horizontal line across the chart to confirm this, making sure the points touch the line like this. I make sure the line is thick and red because it is a monthly level, drawn on a monthly chart. Here is another level at which price has bounced off around 5 times. It is worth noting here that I will add the line to make sure the points are at around the same level instead of trying to do it by eye. It looks like the 7,000 level is also an area where price has bounced several times. Let's add a support resistance line to double check. Yep, we can see that this level acted as an area of support and resistance 4 times. As a side note, it doesn't matter if the price is exactly on the line or not. You need to think of these levels more as areas where price reacted or bounced several times. Price also appears to have bounced several times right at the bottom here. I'll add in a support resistance line just to double check. Once again, we can see that price has bounced off this level 3 times. Okay, so now we need to go down to the weekly chart, where each candlestick represents a week's worth of price action. As you can see, the monthly levels are still represented. Now, as we go down through smaller time frames, there is no need to zoom out completely. This is because, firstly, it is important that we can see potential price bounces, and also because, as long as you find a support and resistance level at this zoom level, it will also act as a level further back in the past, which I will show you soon. So let's find our first level. So these levels will be in between the monthly levels. Here, at around that 8717 level, it looks like price bounced off quite a few times. I'll add in a level to check it. We can see that at the moment with my software, it is saved as red and thick, but I will change it to blue and medium thickness to distinguish the weekly from the monthly levels. As we move further back through past price action, we can see that price did indeed bounce off this level several more times. It also appears that there is a level around that 8320 level. On drawing a support resistance level, we can confirm that this is the case. Remember, we are looking at major and consistent areas where price bounced and/or reacted. If we move further down, now we can see that price appeared to bounce several times at the 7743 level. Once again, a horizontal line confirms this as a support resistance level. We can also see another potential level a little further down around the 7423 level. Again, another support resistance line confirms that this is indeed a weekly level. Okay, now let's go a little further into the daily chart, where each candlestick represents 24 hours worth of price action. Again, we don't need to be zoomed out to draw these daily levels. So these levels will likely be in between the previous levels drawn. For example, in between the top monthly resistance level and weekly support, we can see that there is a potential level around the 8992 area, where price is now. We add in the horizontal line to check, change the color to black and the thickness to thin to differentiate it from the other levels, and we can see that this level did in fact act as support and resistance to price on several occasions. A bit further down, it seems there is another level around the 8871 area. Once again, drawing a horizontal support resistance level confirms this. Personally, I would also add just one more that would be around the 8800 level. As you can see, it seems as if price has bounced off this level around 3 times. Adding in the horizontal line once more confirms this. Now, you can go on drawing these lines further down the chart as well, and I recommend you do so. However, for the purposes of this video, price is currently in the area where we have drawn our levels, and that's why I'm going to stick to this. So here we can see that a potential trend has developed. I have created a great video on identifying trends, which will be appearing in the top right of your screen right now. So check that out if you are not sure how to identify and draw trend lines. We can see that price is currently heading back down towards that trend line, and this is also coinciding with the daily horizontal support and resistance level that we drew previously. If we now add in our Fibonacci indicator, just like I taught you in my previous videos, we can see that that level also coincides with the 76.4% Fibonacci level. This means we have 3 indicators lining up to suggest that this is a level that price could bounce off. However, caution should be exercised here because it is a daily support and resistance level, and this is weaker than the monthly or the weekly levels. It is much more likely that price will bounce off a level if it is a weekly or monthly level, and these are the areas that personally I will look to try and place my trades if possible. Of course, it doesn't mean that a trade shouldn't be placed, but you should look for one more indicator, and that brings me on to my bonus step. The pin bar. This is a candlestick that a lot of traders look for at support and resistance levels to indicate that buyers or sellers behind the price have run out of steam and price may be about to change direction. The pin bar is unique in the sense that it has a very long tail above or below a very short body. Traders look for this candle to form at a Fibonacci level to indicate that this is the level at which price may reverse. If you are looking for a chance to enter a buy trade, as we are in the case of the Euro-British pound, then you would be looking for the long tail of the candle to be below the short body. This would show that sellers have run out of steam and buyers may be about to come in and take over, and therefore carry the price up, allowing you to profit from this move. This indicator adds a further and final level of confirmation to your analysis, providing you with more confidence that price is about to turn in the direction that you are predicting when you enter the trade. If you see a candle like this form at a level you are looking at, it could be a good place to enter a trade. Okay guys, there we have it, how to use Fibonacci retracement with support and resistance. So, to read more about how to combine support and resistance, trend lines and pin bars into a strategy, I have put together a 100% free ebook for you called the 3-Step Trading System, which details that strategy that I started out with to trade successfully in the markets. Simply go to www.theposhenglishtrader.com/3steps to download that now completely free. Once again, simply type into your browser address bar www.theposhenglishtrader.com/3steps or simply click on the link in the video description below. To be notified of my next video, make sure you hit that subscribe button and hit like to let me know what you thought of the video. Okay guys, until next time.